Stellantis has announced a new manufacturing partnership with Dongfeng Group that will expand Peugeot and Jeep electric vehicle production in China. The collaboration involves a new facility in Wuhan set to begin operations in 2027. This move is part of a broader strategy to access China's growing electric vehicle market, with both companies investing more than $1 billion into the development of new electric models. Despite this, pre-market trading for Stellantis shares showed a decline, suggesting market skepticism about the timing or execution of the plan. The partnership with Dongfeng builds on a long-standing relationship that has spanned over 3 decades. Dongfeng brings local market expertise and production infrastructure, while Stellantis provides global brand presence and electric vehicle technology. The Wuhan facility will serve both domestic and international markets, positioning Peugeot and Jeep as key players in the Chinese EV sector. The joint venture, Dongfeng Peugeot Citroën Automobile, DPCA, will oversee the production initiative, though full implementation remains subject to regulatory approvals and finalized agreements. The strategic alliance includes a non-binding memorandum that explores further cooperation opportunities. This framework could open new avenues for both companies beyond EV production, including shared technology development and supply chain optimization. The production plan is a direct response to China's aggressive push toward electric mobility, where domestic brands and foreign automakers are competing for market share. Stellantis's move reflects a calculated effort to secure a foothold in a market that is expected to become the largest for electric vehicles globally. Despite the strategic significance of the Dongfeng partnership, Stellantis' stock declined in pre-market trading. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Reaction could indicate investor uncertainty about the execution of the plan or concerns over market saturation in China's EV sector. Investors may be evaluating whether the investment is sufficient to compete with local giants like BYD or NIO. The stock's movement also suggests that market participants may be waiting for more concrete data on production timelines and profitability projections. The collaboration is part of a broader trend in the automotive industry, where traditional automakers are forming alliances to share the high costs of EV development and manufacturing. Stellantis's decision to partner with Dongfeng may be a response to pressure from global markets and regulatory changes favoring electric vehicles. The company's Peugeot and Jeep brands are expected to benefit from localized production, potentially reducing costs and improving market responsiveness. The Wuhan facility will be central to the partnership, leveraging existing infrastructure and workforce to scale production efficiently. This is a critical step for Stellantis, which has been slower than some competitors in transitioning to electric vehicles. The facility's dual focus on domestic and export markets could help the company diversify its revenue streams and reduce dependency on any single market. The joint investment of over $1 billion signals a long-term commitment to electric vehicle development. This includes not only manufacturing, but also research and development for new electric models. The investment is a significant financial commitment, and its success will depend on market adoption rates and the ability to compete with established EV brands in China. The next key signal to watch is the progress of regulatory approvals and the finalization of contracts. If the partnership moves forward as planned, it could mark a turning point for Stellantis's electric vehicle strategy in China. Investors will also be watching for updates on production timelines and early sales data from the new models. The market's reaction to these signals will provide insight into the broader acceptance of Stellantis's EV strategy. The stakes are high, given China's dominance in the EV sector and the intense competition from local manufacturers. Stellantis's ability to adapt and execute its strategy in a timely and cost-effective manner will be crucial for its success in this market. The partnership with Dongfeng is not just about manufacturing. It's about aligning with a company that has deep roots in China and understands the local dynamics. This could give Stellantis a competitive edge in navigating. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The complexities of the Chinese market. At the same time, the company must ensure that its electric vehicle models are competitive in terms of price, performance, and consumer appeal. The success of the Wuhan facility will depend on how well these factors are managed. The market will be closely watching for the first signs of progress, including the finalization of contracts and the start of construction at the facility. These developments will serve as important indicators of the partnership's viability and Stellantis' ability to deliver on its strategic goals. If the partnership proves successful, it could become a model for other automakers looking to enter or expand in China's electric vehicle market. For now, the focus remains on the next steps and the signals that will emerge in the coming months.